Good morning, traders. I'm Dennis Dick.
And I'm Joel Elconin. Welcome to Pre-Market Info.
Market rallying a little bit here this morning, getting a bounce back. We're up 3 points, 1490 and a half. Fair value's down at about 1484, so we're actually up about 6. So a little bit of a bounce back after yesterday's sell-off.
Yeah, these are always the fun days. I mean, the market just got thrashed near the end of the day. The Italy problems, the S&Ps obliterated that 1490 level. It makes me embarrassed for even having that as an important level. We've got a rebound now. I think we're going to struggle to get back into the 1500 range here. I'd love to see get over the Globex high at 1493, maybe sneak up to 1498. But this is the dead cat bounce we've been looking for.
Yeah, I think this is just a bounce, maybe two. You know how I'm always a fan of the 2-day move. Obviously, it was Italy knocking us down there yesterday. European troubles there again, and that's why the market turned around and just got absolutely crushed. Kind of caught us all by surprise. Closed on the lows. Overall, the financials were leading the way down. If you bring up a chart of Goldman Sachs, that stock hit an intraday high, a 155.69, turned around and they just killed it. Knocked it down to 147.60. It did close only a nickel off the lows, and just like many of the other stocks in the S&P, all of them closing near the lows, driven down by some huge sell imbalances at the end of the day.
Yeah, a lot of stocks did close on their low, as Goldman Sachs did here. Just been stair-stepping up this year, just very slow, methodical move, and then boom, one day it gives back 7 points of it.
Elevator up,
Trading,
escalator down.
yep. Trading above yesterday's low here, 147.60, only 40 cents though. So this is a very, very muted bounce. Below that 147.60 level, I'm looking for the test this triple bottom here around the 144 level. 143.84 was the low on January 29th.
We could actually note Goldman Sachs did go ex-dividend today for 50 cents, so it actually is bouncing up about a buck. The adjusted close is 147.15, so it is up 85 cents here. And some of your other financials are bouncing a bit here this morning as well. JP Morgan is up 40 cents too after a day of destruction for it too. Got up over $49, turned around, they just rocked it, closed on the low, or right near it actually. 47.65 was the low, closed at 47.70. It is bouncing this morning too, so we are getting a bounce, but I think you're going to have a lot of longs that were in this stock looking at, oh, I can get out of this and get half of my possible gains back, or losses that I incurred yesterday back. They might be a little bit nervous here and taking some profits, because we have had a heck of a run in these financials.
Hit 48.20 in the pre-market. I would use that as a minor resistance point if you're looking to get out of some longs or initiate some shorts. Looking at the low that we had yesterday, just settled 5 cents off it. It looks like if you take out this 47.65 level, you're going to quickly visit this $47 level. You had a low of 46.88 on January 31st. So 47 is the next stopping point on the downside. Coming back on the upside once again, that in the pre-market high of 48.20.
Bank America too, also same story with all these financials. They basically just turned around and got killed yesterday afternoon on Italy. But look at this $11 level on this. Wow. Bank America. It got right there. It kissed that level back on January the 18th, got to 11.02. Yesterday took it out by a couple of cents, got to 10.98 before closing at 11.03. But you talk about a bogey. This 10.98, if this number starts to get taken out here again, this whole $11 area starts trading through 10.95, it opens up.
And what do you say about triple bottoms here? You had a low around the $11 level back in mid-December. You kissed that level again on January 18th. Now you came down again, 10.98 yesterday.
I always
not
say
getting much of a bounce in what you say.
I always say third time's a charm, or third time's a charm, or there's no such thing as a triple bottom, because usually when it comes back the third time, it rocks right through it. We obviously did bounce yesterday, and we've got to consider one thing. You had a lot of large sell imbalances at the end of the day, so it was order flow based. The last 10 S&P points were probably mostly based on those large sell imbalances. Probably a lot of them could be due to leveraged ETFs that have to sell at the end of the day. Whenever you're down 15 points or so, there's often follow through. through in the last 10 or 20 minutes as on the market close. A lot of players know there's going to be some leveraged ETFs dumping stock. So not surprising that we did close on the lows, but it is concerning me. This $11 needs to hold on Bank America.
Does it concern you as much as this
Same
$22
thing.
level here in Morgan Stanley?
Talk about levels. We have come to some critical levels in a couple of stocks in a hurry. We were talking a bit about resistance yesterday. It's unbelievable what one day can do. Now we're talking about all these key support levels. Morgan Stanley, $22, absolutely enormous. We kissed that level back on, try to grab the day, I'm not doing very well, 22.05 on the 29th of January. We kissed 22.02 yesterday. If we take out that 22, man, I don't want to see what's going to happen below.
Right. Kevin's one step ahead of us talking about the gap to fill under 21. You had the gap here. I believe that was earnings related. It looks like everything's coming back to roost here after gapping up after earnings and coming back to fill the gaps. But that's a scary look. Also under this $11 level, if you can see something back in Bank America, if you can see some support between 11 and 1064, you let me know.
Yeah, not much on that one either. Might as well talk about them all. Bring up Citigroup too, because same thing.
I don't want to scare our listeners. I'm going to turn the show off.
They'll turn around and they'll bounce. But here's the same story again. Look at this 41 level in Citigroup. You've got a lot of critical levels here that we are talking about, and there's still support until it's broken. So we're not saying the 41's your bogey and starts to really take that out. We're trading up here today, 41.38. So they are going to get a little bit of a bounce. But if they come back down there again, just be careful if you're picking bottoms. Don't let this thing start trading 40.90, 40.80 and get caught in a vacuum, sweep down to like 40 or something, because there's not much below 40, between 40 and 41 on this stock.
Is there, are we real? I mean, I know the SPOOs really got shellacked between, after the 4 o'clock close, and that low was a little bit exaggerated, but are things really trading up that much relative to fair value?
The financials are, just the financials, and this is a financial-based rally because we're up about 5 points, and the financials, obviously the beta is about twice as much as the market right now, so when you get a 0.5% move in the overall market, expect a percent move in the financials right now because they are volatile, so you can't look at historical betas. You got to look at current betas right now. And with yesterday's move, obviously these financials are going to be a lot more volatile than they normally are. So I think you're kind of in line here, to be honest with you, Joel, just when you consider the betas. Let's move on to a couple individual stocks that did report earnings here today. Home Depot reported this morning. Stock getting a lift here. Closed on the lows yesterday, just like everything else did. They did everything right in this quarter. 67 cents against estimates of 64. They're increasing the quarterly dividend from 29 cents up to 39 cents. And they're announcing a $17 billion stock buyback. They're doing everything they can to get this stock to rally higher. And to be honest with you, I'm not that impressed with the rally. It's only up just over $1 here on all that good news.
Yeah, I had one stupid print way up here above 66. I think someone just hit the lever here. But the tradable high here is 65.27. We hit that just a few minutes ago, so we will use that as resistance. Looking at the dailies here, the stock has had a major run. Gave all of it back yesterday. That 64 level is going to be critical today. It's going to open higher, but if we peel back, that 64 would be a better support, especially if we're starting from $1.25 higher. I think going back on the upside, you did have yesterday's high at 66.55, but after the stock trading down to 64, I think the offers are going to start to line up. This nice round number is 66.
Macy's also reported here today. They reported earnings of $2.05 versus $1.99. They see the full year 2013 at $3.90 to $3.95 versus the estimates of $3.84. So Macy's is getting a nice lift here this morning. It's up $1.75, trading at 40.25 on about 100,000 shares. So it's getting some volume here too.
40.40 was the high in the pre-market, Dennis, but my question to you is if it gets up to this 40.50 level, what are you going to short, 10, 15, or 20,000?
10, 15, or 20. It's a big number. But you got to remember, when they do have earnings, they can continue to move. But, you take shots. This is what you do as traders. You have reference points and you take shots. If it gets up there, I'd probably take a shot out of 40, 45, 40, 50. Starts to trade 40, 60, 40, 70, maybe I peel out of it. But, you know, you have 3, 4 highs at the 40, 50 area. Maybe it holds here again. That's what you do. You have risk return. And if you're going to risk 25, 30 cents, allow it to go through that level maybe by 10 or 15 cents. Maybe you take a shot at that 40, 40, 40, 50 level.
Yeah, I mean, it spent very little time above that 40.50 level. Made a high of the move at 41.15, but the last three times it's come up, almost hit it smack on the kisser. So that's one of the best levels I've seen in Macy's in a long time. On the downside, it's closed right on the low, 38.52. So if we really start to pull back, that's buck and a half away from here. That should be good support today in Macy's.
AutoZone reported earnings here this morning as well. 478 versus 476. It's not good enough because the stock is trading down. If you bring up that pre-market chart, we're down over $8 here now. It's 369.99. It's not a lot for a $300 stock, but it is getting beat up here this morning. And now, if I'm going to make you change the chart again, we'll go out to the dailies there. You can see there's a low on the 15th at 369.47. That's the bogey that maybe I'm using off the hop.
Yeah, I mean, I'm terrible with these $400
Oh,
stocks.
it's hard as hell.
Unless it's Apple, they're so illiquid. But
Yep.
you did make a good point there. 369.47, the low we've hit in the pre-market is right at that area. But look, I mean, it's just sitting there like a dead dog.
Yeah,
it's
kind
not
of
it's
scary.
not doing anything. I mean, if you're trying to scoop something up off the open to try along here on this misleading S&P pop, I don't think AutoZone would be the stock.
We should look at Advanced Auto Parts too, which is AAP, because it could have a little bit of a sympathy move. Those two stocks often do trade together. It hasn't traded. It's only traded 500 shares, just down 36 cents here today at $78. But you've got to. I don't think you're going to see a 4 or 5 point move or anything like that in the stock. But you could knock a couple bucks.
You could, man. Look at
it's perched. I know. That's why I'm looking at this chart. It's looking like
God.
It's perched up there. Okay, give me your technical there, Joel.
Okay, what are the 74 puts going for? I mean, Jesus Christ! I mean,
that's a scary chart. A little bit.
That's
scary.
great. Pick them nice and out of the money so they can get there right on expiration, and you don't have anything. But now 78. You had two lows right under the $78 level, 77.85 on February 13th, 77.93 on the 15th. Just sitting there, bad news, 78. Ooh, takes that out. Easily see 77.
Let's move on to Apple, because Apple had a reversal day too. You actually cited a great number yesterday morning on the show at the 455. That held. The high yesterday was almost right on the button, 455.12. It turned around, just murdered it yesterday, and obviously continued down, closed near the lows of 442.80, bouncing a little bit here this morning, but this is starting to get concerning to me because we have been down here way too many times now at this 442 number. Obviously, support is support, we'll say it again, but this is the fourth time we were trying this 442 area. You do have a double bottom of 435 if 442 goes, but man, that's starting to.
Stop, man! You're taking all my shtick here. Come on.
Go, give her, Joel. Give her.
All right, be quiet. 445 pre-market high. Let's keep a real close eye on that. As the pre-market levels are pretty good. But what I'm looking at here in good old Apple, it's just been flirting with this $442 level. Closed right on the low. You're getting some kind of bounce. I think you take out 442. You should have no problem going down here and testing that 435.86 level, which has been the low of the move. You can't see it on this chart, but I did find a gap going back to January of last year, down to 425.10 is the next level. But, correct me if I'm wrong in my thinking here. Since Apple has just been beat up so much since making that all-time high over 700, I mean, if the market really gets whooped, if we really go into a sell-off, perhaps to the levels to the beginning of the year, I mean, I just don't know. I mean, can Apple still be the leader? If it is, it's going to go to $300.
Yeah, I don't think it's going. I think it's going to be the financials that are moving this market. They've kind of taken the reins from Apple, and Apple's correlation to the overall market has broken down here. We know we've been talking about that for the last 2 months. The correlation continues to be broken down. It's trading kind of just with a mind of its own. So I'm not that concerned if the market starts rolling over that Apple's going to lose 100 points here or something like that. I think it's just trading, but I am concerned with that technical chart that we were looking at, because like you said, that 4 times we've been at this 442 number, and eventually you play with a number long enough, you're going to take it out, and I wouldn't want to see what
On
happens
the
if we take
monthly
out.
there, you could have like a head and shoulders top there. I
You
mean,
had a
look
head
at
and
that.
shoulders even on that daily that you were looking at with the whole 442. If you go back to what we had, like
Another one,
that
huh?
looks like a hell of a head and shoulders. That 460 area looks like major resistance now, and man, we start taking out this 435 area. I don't know. Valuation, looks good, but technically, maybe sit on my hands if I'm going.
Not the valuation in your account if you're long or short puts. It's not looking good.
Yeah, no, not very well at all. Google, let's talk about it. It had a key reversal day yesterday. That 808 number we talked about, man, it got there again yesterday. That's the third time it's been up there. 808.41. Call that a triple top. Sorry about the phone. Call that a triple top. Stock turned around, peeled back after that. 790.77 is where it's actually closed at. It's bouncing a bit here. I'd use yesterday's low of 70.90.49. That's the number I'm looking at.
Didn't you tell Bernanke not to call between 8:15 and 8:45?
Bernanke trying to let me know what he's going to be talking about this, and I wish I had
Seven
connections like that,
seven
Joel.
ninety is huge in this. We hit 790.49 yesterday. Had a couple lows in the 791 handle, 91.22, 91.79. Just getting a little bit of a bounce here. You got to assume it takes out this 790 level. You do have a minor support point at 70.8707, but major support 77.77. I can't wait till we take that number out. I hate saying that number.
And you've got
But
a lot, and I just want to say you got a lot of people that are bullish this stock, because I tweeted out yesterday. I was just saying, about that 808 double top, triple top potential there, whatever you want to call it, because it was an 807 number there too. And I had like hate tweets coming back at me saying, "Oh, it's just a pause before the continuation rally." It seems like whenever I get the hate tweets coming at me or whatever, then all of a sudden you usually it's telling me that the market's a little bit maybe too long. Maybe it's just a couple people that were bullish the stock, but
you,
hard to say.
you want to hear my all-time worst trade in Google?
What's your all-time worst trade?
Before earnings here, when this sold off here, on the weeklies, I bought before the number. I bought some of the 740s and 750s.
Didn't get there.
Yeah, this day. It popped up, but they were weeklies, so I had to scramble out of them at the end of the week to make a little bit of money.
Yeah,
and,
it's so bad when you make a good call like that and the options don't move enough in your favor because it's all just intrinsic value priced in and there's no time premium for it. Yep. So that sucks too, but you gotta. That's why options are always tricky. They're tricky. You gotta consider all those other variables.
Sell them.
So that's the long run, as options. It's selling insurance to the market more than anything. So, when you're selling puts and you're selling calls, you're basically selling insurance to the market, or lottery tickets to the market, I guess, in the case of calls. So, you always want to be the insurance company selling. So, unless you're selling on subprime mortgages. Let's look at a couple other ones in the Big Ten. Exxon Mobil. Wow, what a reversal and what a range for that stock yesterday. Seriously, that stock got over 90.20, turned around and lost $2.50 intraday, closing at the lows 87.70. That's where it kissed up. And basically, it's 1 month range. It touched the resistance yesterday and touched the support. That is a crazy range.
This is a second day in the last couple of weeks of heightened volatility. I'm sure the VIX is on the move a little bit.
VIX spiked 30% yesterday, I think.
Yep. So and now you're coming into all these important levels here. You did 87.70. You can't get too excited if it gets through there. 87.61 was the low on February 7th. So hanging in there. If not, looks like it's a straight shot here down under 87 to 86.59. Would love to see this thing sneak up into the mid 88s here on this supposed rally in the S&Ps. Maybe 88.5 would be a good level to try a short if you want to try and sell into some strength. But it's always tough when these things whacking them in into support. You either get that immediate reaction or it's 30, 40 cents against you.
CVX, bring up a chart on that one too. Same story, makes a new high and a new low. This thing kissed up. Look at the chart. 117.34 makes you think, oh, it's going to get ready to break out again and start to move higher. Not so fast. Turns around. Yeah, just bring up the chart from yesterday too if you can. Turn around, just straight down yesterday afternoon after doing that. Really not a lot of pops in there at all. So if you bought that thing up there, 117, thinking it might be breaking out, and you were stubborn, you could be under some serious heat right now. And you get these swing traders that do get stubborn like this, which this is why it always concerns me when you have such a sudden, shocking move in the opposite direction, especially after making a new high. I think you do catch some longs, some swing trading longs, and that's why you often see that second day follow through move. So you get a little bounce here this morning, but if that 113.50, if these stocks start to drift back down, they take out that 113.50, man, I don't want to be long this stock.
Right, getting a bounce up to the pre-market to 114 and a quarter. I mean, just the way it came down, that's the potential that it has to go back up. I'm just pulling a number out here, 114.75. You get another 30, 40 cent pop here. You'd be shorting in the strength. Probably some size kicking around there at the 115 level as well.
General Electric, same turnaround story there yesterday. Ended up getting as high as 23.53, turned around and they killed it all the way down, closing at the low 22.81 right on the button. It is lifting up 4 cents here, whoop-de-doo-dah day. When the thing falls 70 cents yesterday, gets a 4-cent lift. It looks to me like it wants to fill your gap there, Joel.
Right, yep, that goes down to 22.65. I mean, that's the thing when you have these big gap up, moves in these stocks. It's really hard for them to maintain them. I mean, you get the gap, you get the news, the HFT guys, sniff out the bids, just jam it up for no reason except to race in the paper that's in there, and then when the market pulls back, you just basically have nothing in there.
Well, any closing market thoughts here? What's your overall take? Are we going to end up following through here, or are we going to bounce?
We've blown through, so many major support levels. We blew through 1450, we blew through 1500, started to migrate towards that 1550 level,
yeah,
but got shut down at 1530. I think, if this market doesn't start to get back over that 1500. I don't have a good number there. I don't have a 3 or a 4 star or anything, but that's just a number that's just going to be sticking in my head over the next couple days. I think the offers, since we had that huge sell-off yesterday, I really think that's going to be the resistance point. And then since we obliterated that 490 level, look at this 480 level here. You had the low 81.75 yesterday. You had a low at 482.75 back on January 24th. So that whole bogey, that whole 1480 level is now the next major support level that could lead us down to the correction to the levels we saw at the beginning of the year.
That's our show for today. Have a great trading day, and we will be back at you guys tomorrow.